For the avoidance of doubt, The Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Months ago, I told paying subscribers that bonds were going to be a staple of my portfolio going into 2025 based on the environment that I was looking at. Now it seems like bonds might be the only thing green the market has left. I'm glad that I made that change, and I'm going to have more things to tell you about in today's newsletter and podcast. I'll see you in 2 seconds.
There's no jargon and no time to waste. Join the simple side and end up in first place. Welcome to the Simple Side.
All right, welcome back, or welcome to the Simple Sides Saturday Sendout. You were either reading along with us on Substack at thesimpleside.substack.com, or you're listening to our podcast on any of the major podcasting platforms. We're glad to have you all with us again this weekend. As a reminder, I would love for you to go fill out the survey link that we have in our newsletter, which again you can find at thesimpleside.substack.com, to let me know what you like about the newsletter or the podcast or anything in between, how you'd like to see it updated, and all of that good stuff in between. So far, we've made over 20 updates to the newsletter thanks to recommendations from subscribers, paying and free alike. In fact, one of the things that we've made has been a daily newsletter that sends updates on the market with fundamental and technical analysis for just $1 a month or $10 a year. And you can find a link to that newsletter in today's show notes for the podcast. All right, let's continue on and talk about what we have going on in the markets. Like always, we're going to discuss the updates and developments that we have going on with the newsletter and with our website that is soon to be released. We're going to talk about our portfolio returns and any updates that we have to the portfolios. We're going to discuss some market trends and our outlook. We'll talk about weekly politician trading, weekly insider trading, a little bit on our gold report. Then we'll do a weekly article summary. And then, of course, paying subscribers, you guys have access to our weekly stock picks, which are up over 14% year to date, doing incredibly well. Of course, we also give paying subscribers some insights into mergers and acquisitions. We give them some top stock investment ideas, a microcap stock pick, actually 3 microcap stock picks every week. And then we talk about earnings that are upcoming for the week and options that might work well to trade for those earnings. So without further ado, let's get into it. If you've been subscribed for a while, you know that we do something that almost no other newsletter or analyst does in the entire world. We allow you to go and copy trade our portfolios 1-to-1 on Double Finance. If you're a paying subscriber, you have access to the service for free. So reach out to me at thesimpleSideNews@gmail.com to let me know if you haven't gotten an email with the links that you can use to go and copy trade our portfolios. Also, I'm sure that you've seen that we're releasing our stock or ETF scanning tool that is going to be coming out in the next couple of weeks. Paying subscribers, of course, will have immediate access to this tool and at least a year free to the website to go and check it out, use it, play with it, and let us know what they think. The last little update that I have is that we will be doing a $2,000 giveaway coming up in the next month or within the next couple of weeks. The timing is yet to be decided. Last year, we gave away over $4,000 to paying subscribers. That's just 2 subscribers that won $2,000 apiece, and we're going to be doing the same thing again this year. But enough about all the updates and developments that we're bringing to our subscriber base. Let's talk about our stock portfolios. Our flagship fund is down 16.61% year to date. Our contrarian trade portfolio is up 40.32% year to date, and our weekly stock picks are up 14.53% year to date. This translates to an overall return, an average return for all of our portfolios of 12.67%. Now, while the market's down, the average return of a portfolio sitting at 12% is nothing short of incredible, and I could not be happier with that performance. A couple weeks ago, I mentioned that our weekly trade portfolio would continue to outperform and said that it is a trader's market right now. Passive investing does not work well, and that has proven to be true. Well, at least passive investing doesn't work well when the market is trending negative. Now, my subscribers know this. I know this. I've been sharing it with anybody who's been reading my newsletter, and collectively, we have been able to outperform based on this reasoning, and this will continue to be the case. I will also continue to DCA or invest monthly into my portfolios as things continue to fall. There are a couple of companies that I would love to add as valuations fall. A few tickers that I'm looking at currently are FG and ACGL. Of course, I have been preaching ZROZ, which is a zero coupon bond ETF, as a hedge to all the madness in the world right now. And currently, ZROZ is up 7.21% year to date. Now, I've been harping a lot on the fact that our weekly buys have been outperforming the market. So you're probably wondering, how much have they been outperforming the market? Well, over the past 37 weeks, I have tracked the returns that we've made every single week meticulously, and we are up 32.64%. That correlates to an annualized return of 45.88%. And over the same time period, the SPY is down 6.95%. That turns into an annualized return of negative 9.77%. So just incredible outperformance on that level. In fact, over the past 37 weeks, we have outperformed the SPY with our weekly picks by 39.59%. Just this week, for example, we returned 2.14% on our weekly picks, while the SPY dragged at negative 8.1%. And of course, paying subscribers, you know, you can skip down to the bottom of this email and you can see all the picks we have for the upcoming week. All right, let's talk about where I see markets are at right now and the outlook that I have for the upcoming months, weeks, and years. Currently, the projected year-to-date returns for the market are 2.4%, which is actually a major increase from last week's 0.8%. This, of course, is due to the fact that the market dropped drastically over this past week. In fact, we saw 1,672 stocks with gains this past week. Conversely, we saw 8,043 stocks with losses this past week. That means the median return for stocks that we are looking at is negative 7.98%. Those are terrifying numbers to look at. And in fact, this is the worst return ratio that I have seen in the markets since I started tracking all this data on the newsletter. And like I said, I've been saying it for weeks now that the market was going to continue to trend down. And I have tried to do as much as I could to keep investors updated and let them know that they should be protecting their assets. Here's a direct quote from last week's newsletter. The bad news is that there still seems to be no turning around from the current negative directional shift. We will likely see next week open lower. What changed? Tariffs again. That's exactly what I said last week, and it has proven to be true week and week and week over and over and over again. Like I said this last week, and I even put together a covered calls article 2 weeks ago to let you know that you can protect your portfolio and hedge some of the downside risk using covered calls. If you want to understand how to do that, you need to go and read the newsletter that I have linked to in today's newsletter. Again, you can find this at thesimpleside.substack.com and go and read that newsletter. It's called Educational Series Number 1, Earning Income from Your Stocks in Retirement. Of course, if you look that up on Google with The Simple Side, you'll be able to find that article as well. Now, I hate to repeat myself every week and constantly say the same thing week after week after week, but when the markets are going down, 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 like the ring of fire, like Johnny Cash said, I have to keep saying the same thing. We are not consumers. We are investors. Make sure that you're not paying attention just to the news. They're going to continue to sell fear over and over and over again. What you need to do is be watching data, paying attention to earnings reports, seeing if companies are beating earnings, if they're falling short of earnings, and watch the revised data metrics that are going to be coming in about inflation and jobs and all of those numbers. Of course, remember, they revise these numbers 2 to 3 months after they report them. So be on the lookout for the revisions. You don't want to look at the numbers that are coming out. Those are either going to be selling fear or greed, and you don't want to play into that. All right, let's talk about the sector analysis that I have for this week. The bottom three performers were energy down 14.74%, tech down 11.76%, and healthcare down 11.11%. Now, typically, I would include something covering the top performing sectors as well, but no sector was green this week. Everything was negative. Everything except bonds, like I've harped on, but I'm not going to continue to do that again. For those of you that don't know, Manesh Prabhai, who's the Warren Buffett of India, has said before and will probably say again many, many times that he believes that investing in what is hated and unloved is the best road to success. Now, typically, this report often shows us this quote in action, even on a week-to-week basis. Sometimes we'll see sectors that will be one of the top three performing sectors in a week, and it will flip to be a bottom three performer the next week, and vice versa. The same can be true for bottom performers becoming top performers. So if you're looking for sectors that investors currently hate the most, those that have underperformed the market year to date and over the past month, you should be looking at energy, down 18.27% year to date. Industrials, down 20.64% year to date. Consumer cyclical, down 20.69% year to date. Technology, down 24.45% year to date. And healthcare, down 26.08% year to date. Be paying attention to all of those sectors. Now I'll quickly jump into the politician trading report and the insider trading report that we have for this week. On the political side of things, we saw politicians get crushed. We tracked two political ETFs, ticker symbols NANC and GOP, that track Democratic and Republican trading respectively. NANC was down 7.52% on the week, is down 13.29% over the past month, and down 15.13% year to date. GOP, which is the Republican tracking ETF, was down 8.12% on the week, 9.43% on the month, and 11.02% year to date, down. Both ETFs are struggling. For those of you that don't know, I used to track KRUZ, and that ticker symbol has been replaced with GOP. So don't be confused by that ETF name change. For comparison, the SPY is down 13.57% year to date. So it's being outperformed by the Republican tracking ETF and underperformed by the Democrat tracking ETF. I also watched what politicians are doing over the past month, and I saw 10 politicians make 48 trades with a total trade volume of $1.37 million. This is one of the lowest trade volumes that I have seen since I started doing this report, but they have a high buy-sell ratio, which is 3.33. This is the same as what it was last week, which shows continued bullish sentiment from politicians. And yes, it is surprising. And yes, there are politicians that are selling, but the buyers just seem to be outweighing the sellers for the political traders. You can, of course, go see the 5 most recent politician trades by going and checking out the newsletter, thesimpleside.substack.com. I'll run you through quickly what stocks were bought and sold. We had an Amazon buy, a Walmart buy, a Westinghouse Airbrake Technologies sell, the Turo company a sell, and a Bitcoin ETF buy. All right, let's talk insider trading. We track another ticker symbol here. That ticker is SURE, also known as Sure to me. And this ticker is down 8.49% over the past week, down 11.53% over the past month, and down 12.99% year to date. Insiders are much less bullish than politicians, with a buy-sell ratio of 0.38, which is higher than last week's 0.34 and is above the 5-year average of 0.35. This indicates a slightly bullish sentiment from insiders as well, which is somewhat surprising. Now, that being said, you can go and see the 5 most recent trades in the newsletter, but I want to talk about 2 of these that I noticed that are very, very interesting. And in fact, one of them made my weekly buy list for the paying subscribers, and I'm going to be giving away that pick for free. The first one that I want to talk about, the trade was made by Equitable Holdings. They have an average return per transaction of 15.39%, and have outperformed the market on 100% of 4 transactions. So they made 4 trades, and 4 out of those 4 trades outperformed the market over the same time period. The stock that they most recently bought was Alliance Bearstein Holding LP. The ticker symbol for this is AB. It currently makes up 100% of the Equitable Holdings portfolio, and over the past 5 years, they've made 3 buys and 0 sells of the stock. Now, Equitable Holdings' purchase was $700 million worth of AB stock, and this comes as a complete surprise as they're buying right in the face of a market downturn. So what do they know that we don't? Why not wait for the market to continue down and then buy the company? This is something that I find very interesting, and after looking at the company's financials, I could not figure out a reason for why they wouldn't wait for the company to continue down with the rest of the market. That makes this stock a buy stock for me over the next week. Just as a quick note on the company, they're trading at a forward PE ratio of under 10, and they have an 11% margin of safety based on the discounted cash flow analysis that I ran. For those of you that don't know what that means, I did a bunch of nerdy stuff, and it says the stock should be safe to buy. The other inside trader that I want to highlight is Celebra, and I talked about them last week, and I still don't know how to say their name. Celebra Capital, their average return per transaction is 132%. They outperform on 95% of their trades, and they outperformed on 95% of 20 trades. The stock that they most recently bought is AEVA. It's 15.31% of their current portfolio, and over the past 5 years, they have 1 buy and 0 sells of the company. Now, AEVA is down 10.06% over the past week. However, it is up 153% monthly. And this is the second week in a row that Celebra Capital has poured money into the stock. However, I cannot put this stock on my buy list for the week. The company does not look great. They're burning through cash. They have no profits, and they've been issuing extra stock to help finance their business operations. And I just can't get behind that. So I'll be ignoring this purchase for a weekly buy this week. Now, something that you shouldn't be ignoring, at least if you're a gold trader, is the current decline of gold prices. Gold, of course, is flirting with the $3,000 psychological mark, and tariffs have given the US dollar a reason to rebound. Now, if you want to go read some technical fundamental analysis on the gold trade, go ahead and pop into the newsletter. Again, thesimpleside.substack.com, and you can read a quick analysis of gold and how to trade it. Now, last week, our outlook painted a picture for gold remaining resilient among ongoing tariff concerns and becoming a safe haven for investors. Now, we were expecting the uptrend to hold despite the intermittent profit taking. However, the rebound and the unexpected larger tariffs that we saw coming from the Trump administration took this and destroyed it. Gold seems to be shifting down now. However, month to month, it still looks like a buy. Now, for those of you that don't know, I usually cover a weekly summary here of a stock pick that we covered during the week or an educational article that we sent out during the week. However, I've been hammering working on the website and did not put an article together this week. I want that website to be released to you guys as soon as possible. It's going to be an incredible tool. So no summary here. Paying subscribers, you know that you can go and find all of our weekly picks if you just keep on scrolling down past all these wonderful offers for those of you that haven't joined the paying subscription. And you can go check that out there. As always, thank you so much for joining us today. I will be seeing you all next week.